Hello, this is James Graff with Advisors Mortgage Group with another Mortgage Minute. This will take many minutes. We're going to go over the business news for the week of August 21st. It's actually coming up, 21st, 2020. Getting right into it. McDonald's clawing back a CEO's severance pay. McDonald's ignited a rare public war with its former CEO, Steve Easterbrook, according to the New York Times, departing from corporate America's, quote, traditional disclose it and move on decorum, unquote. The fast food giant sued Easterbrook last week to recoup the $40 million compensation package he kept after he was fired for having a consensual relationship with a subordinate. Wow, there's a lot there to discuss. I think I'm just going to keep reading. What can we talk about? Consensual relationships. I approve of consensual relationships. Subordinate. That's how much consent is there if they're subordinates of yours? What is to be gained on both sides? It's ugly. I'm not a fan of that. That's a good reason to be fired. Giving him severance pay. Why would you give him severance pay after that happened? Why don't you investigate it first and then figure out how much severance pay you should give him later on? That's what really should have occurred. We'll see what happened. Okay. At the time, the company said it was not firing Easterbrook for cause. Again, trying to save him. They're always trying to save the CEOs. That's my opinion. I'm interjecting opinions already. But of course, the CEO did a great job of running the company. They're trying to do him a solid, right? They're trying to do him a solid when they don't owe him a solid. They're firing him. They should do a full investigation and state why he's being fired. Honesty, transparency, it's very important. Anyway, sorry. But new allegations. Sorry, this is interesting. So new allegations surfaced last month. So after the firing, the company found Easterbrook had tried to delete sexually explicit pictures of several employees he had, quote, sent to his personal Hotmail account, unquote. Maybe I shouldn't be reading this article. So, yeah, I'm getting hot under the collar. Maybe we'll move on because this is too salacious. I'll say something I don't want to say. The McDonald's board is doing the right thing, according to Breaking Views. But, quote, Easterbrook's earlier escape shouldn't have been so easy, unquote. My thoughts exactly. Last fall, directors chose to skirt the issue of cause because they feared if they paid Easterbrook, quote, a bag of nothing burgers, he would fight back in court, unquote. Of course. Now, is that in the best interest of the shareholders? I would have to say it is in the best interest of the shareholders. Again, these are interesting articles, right? Instead, they gave him such a generous severance package that one major shareholder urged other McDonald's investors to vote against management's pay plans. It's reasonable now to wonder whether the initial investigation went deep enough, and McDonald's will probably have to rethink how it defines cause for fired executives. Yeah, they should have done a thorough investigation, as I said before we finished the article there. Why would you not thoroughly investigate before firing anyone? You should do a thorough investigation. In my opinion, it's safer. Nobody really does that. It's not expected, but it's a good idea. They didn't. Logistics. Amazon looks at empty department stores. Amazon is talking with the Amazon is talking with the country's largest mall owner about turning empty department stores into fulfillment centers, according to the Wall Street Journal. Seems like a good idea at first. I know for a fact that Jared Kushner tried to use mall space, which is technically for business. Instead, he wanted to change it into housing, which seems to make sense to me. And at the time, I think he was thoroughly rejected. You should make use of the empty space, I think, almost any way you can. If it's that empty, that's my opinion. And I think they're changing the tune on making it into residential. which made sense to me. You make inexpensive or expensive residential, and you have a housing and a mall. Why we separate the two uses of real estate, I'm not sure. I've learned it in the past, but I don't remember why we separate them so thoroughly. Tax purposes, blah, blah, blah. Anyway, moving on. The e-commerce giant is trying to, quote, add more distribution hubs near residential areas to speed up the crucial last mile of delivery, unquote, which reminds me of the post office. The U.S. Post Office isn't in charge of all the last mile deliveries. This is why the president's so upset with them. They do the last mile delivery for Amazon all the time, but they also do the last mile delivery for everything. So it's not just Amazon. No, enough opinion there. So, discussions this week with Simon Property Group, the mall landlord, have focused on space once anchored by JCPenney and Sears, both of which have filed for bankruptcy, which I knew that, but a deal would, quote, signal a break from a long-time business model for malls, reliance on a large department store to draw foot traffic, unquote. So again, we're seeing the end of an era again. Just same as real estate is moving from open spaces to more private spaces where people can do a private Zoom call for work or whatever other purpose. Open spaces in real estate are turning into closed spaces with more privacy, and they're turning from small apartments to large suburban places with backyards and space. We're seeing the end of an era. It's the end of an era. The end of malls. And when Amazon is looking at malls, that's the end. So, ViacomCBS media tycoon Sumner Redstone dies. Sumner Redstone dies. The media magnate Sumner Redstone has died at 97, leaving control of his empire in the hands of his daughter, Shari. That'd be Shari Redstone. Said, this is from the New York Times, quote, starting with a chain of drive-in movie theaters, Redstone, unquote, Redstone built a media empire. He acquired the cable programmer Viacom in 1987, expanded his holdings by, quote, wresting Paramount Pictures, unquote, from Barry Diller in 1994, and bought CBS, once the crown jewel of American television, in 2000. It is no longer the crown jewel of television, but at some point, I think it was the only channel, CBS, ABC, CBS, one of those two. ABC, CBS, NBC. I remember that. This is the 70s. Okay, moving back. In 2000, it was much towards the end of its reign. Okay, so it must have been less expensive, but okay. But his waning years, exactly what I just said, I think, but we're talking about now his older years, right? His waning years were marred by boardroom and family drama. Sad. Shari Redstone engaged in a, quote, high-profile battle for control, unquote, of both companies, prompting public speculation about her father's health and mental fitness. Now, I'm sure everyone has cause. Everyone sees a company and a giant anything from different sides and different viewpoints, et cetera, et cetera. It's just sad that it's father and daughter that have those differences. Anyway, moving on. Airbnb, this is fascinating. Drawing closer to an IPO, initial public offering. Airbnb plans to file paperwork for an initial public offering, said, according to the Wall Street Journal. Quote, laying the groundwork for a potential listing before the year end, unquote. An IPO from Airbnb, founded in 2008, has been awaited for years by Airbnb's employees and Silicon Valley backers. Valued at over $30 billion these 3 years ago, Airbnb, quote, rushed to secure financing, unquote, rushed to secure financing as people stopped traveling and cancellations piled up. So they hit a rough patch now, right? Airbnb laid off a quarter of its staff in May. That's fairly large, but many companies have laid off much more. But its quote, rebound has been surprisingly swift, unquote, this summer. So they're bouncing back, and they're going to move on with the IPO. So there's many thoughts in my head. What will this recovery look like? Some wiser people have said it's going to look like an L. That's not good. V or U, good, and good for this IPO. An L, not so good for this IPO. But again, these are not my opinions. These are opinions of other people. Trade secrets. Star engineer sentenced to prison. The pioneering engineer, Anthony Lewandowski, was sentenced to 18 months in prison for stealing trade secrets from Google. This is according to TechCrunch. I have many thoughts there. He's an American. How about all the other countries that are stealing tech secrets incessantly? The Chinese, Asia, all over the world, people are stealing technology secrets from each other and from the U.S. But in the U.S., we've got eyes closer here, right? So I think it's a little unfair in that sense only. Lewandowski admitted to, quote, downloading thousands of files, unquote. Who hasn't downloaded a file? Anyway, moving on. I shouldn't say that. From an early Google self-driving project before he left to start an autonomous trucking company. Otto. O-T-T-O, which I like the name. It's a Otto, like autograph. Autograph. Okay, moving on. He sold Otto to Uber, O-T-T-O, to U-B-E-R, Uber, less than 8 months later, triggering, quote, a multi-year legal saga. That's a big word. Lewandowski filed a lawsuit in July alleging Uber owes him $4.1 billion in earnouts. Earnouts. I'm not even sure what that is, honestly. Earnouts. One word. Earnouts. From Otto, O-T-T-O, now called Uber Freight. So that's a fascinating story to me. I've read several books about AI, cryptocurrencies, et cetera, and I can tell you that AI is nowhere near. We're looking at, I would say, 5 to 10 years, perhaps, maybe longer, until cars can make decisions as well as humans or better. So can they do it now? I'm not sure, but there's legal ramifications which have to be cleared. And I can tell you right now, they're not quite there yet, and they won't be there for some time. Everyone's diving in on it because that's the future, for sure, of course. Safer driverless cars, that's the future, for sure. But to get there, AI itself, artificial intelligence, has got to improve vastly. I can state that with some confidence. They keep saying they're ready, we're ready. Why don't you see them? Why don't you see them on the road? They're not ready. And the main point is humans need to be ready. We need to be ready for those cars. Anyway, that's my 2 cents on that. We're going to look into Nikola's strange $36,000 windfall. One of the stock market's hottest companies reported a total of $36,000 in revenue last quarter. That's like anemic, incredibly weak. Okay, so this is according to CNBC. Thanks entirely to solar installations at the home of the executive chairman. So we're moving on. Nikola, an electric truck developer, similar topic, right? Has become a symbol of the speculation-fueled stock frenzy this summer. Quote, at one point establishing a market valuation topping that of Ford's, despite the fact that it has yet to produce a single vehicle for sale, unquote. So they haven't built anything, and they have a valuation topping Ford's. Okay, I can't comment on that really because I don't know the facts. But Nikola, now valued at $16 billion, can no longer claim that it's just not ready for revenue. This is kind of a joke, half joke, I guess, right? In its first quarterly report since going public in June, Nikola, quote, recorded solar revenues of $0.03 million. That's 0.03 million and 0.04 million. So between $30,000 and $40,000. It's tiny. The company added that the solar installations were, quote, not related to our primary operations and are expected to be discontinued, unquote. They're just like solar panels in the CEO's yard or whatever. I'm not sure. The bigger figure contained in the report, Nikola lost $87 million in the past 3 months. So this is just like the teeny little drop in the bucket. They're just kind of like a comedy thing with their $36,000 windfall. It's silly for a $16 billion company that lost $87 million in the past 3 months in 1 quarter. Anyway, so that's as much news as we can get to in this segment. I'll probably continue with some more news, perhaps lesser news or different news. Those are the big stories of today. This is James Graff from Advisors Mortgage Group with another Mortgage Minute. I'm glad that you stuck listening to me thus far, and I hope that you have an absolutely fantastic day. Thanks again.